This is Chris Casey, Managing Director at WindRock Wealth Management, a unique investment advisory firm with a focus on the macroeconomic big picture and an entrepreneurial mindset to seize on opportunities. Today, we have the pleasure of being joined with Amir Adnani, CEO and founder of Uranium Energy Corp. UEC is a US-based uranium mining and exploration company. He's listed on New York Stock Exchange with the ticker UEC. Thank you for being here today.
Thanks for having me, Chris.
So in today's markets, pretty much across all asset classes, stocks, bonds, etc., really across all geographic regions, at least in the developed world, it's really difficult to find anything of value, meaning everything is really high from a historical perspective in price. In uranium, though, we're looking at a 10-year low. In fact, if you look at uranium price since July of '07, it's off about 80%. I mean, what in your opinion accounts for this price decline over that time period?
First of all, not to make it sound worse than it is, but we're actually at a 12-year low, and it has been a very disappointing year to see the uranium price really underperform, starting the year at around $37 per pound, and currently sitting just around $18 per pound. I would say that probably a number of factors have to do with this underperformance, and it really goes back to some of the themes that perhaps are ongoing themes. One being the nuclear situation in Japan, in terms of 6 years ago, when you had the Fukushima accident, Japan shut down roughly 54 nuclear reactors. Today, only 4 reactors are back online. If we look at expectations, a couple of years ago, people were forecasting that by end of 2016, there would be over 20 reactors back online. That's a big difference, right, to expect over 20 and only have 4. So I think the ongoing slow recovery, slower than expected recovery in Japan, has to do with one of the issues here in terms of continuing to put additional supply in the market, or supply that was previously destined for Japan but is not going to be consumed there, and hence again creates a bit of an oversupply. You have the fact that one of the world's, and if not but the biggest producer in the world, the country of Kazakhstan, has seen a major devaluation of its local currency to the US dollar. So even to some extent has seen some preservation of margin with the weaker local currency and the stronger dollar. You kind of combine these facts along with the notion that in the US in the last 8 years under the Obama administration, nuclear power really was not supported the way you figure an energy source as important and as strategic as nuclear power should be. And I think this probably hurt nuclear power in the U.S., where a few nuclear reactors were shut down prematurely, and being able to permit uranium mines just took so much longer under a very contentious EPA that was very difficult to work with. So these factors all, I think, go hand in hand, and really cause this underperformance that we've seen, and the uranium price at a 12-year low.
Let's put that uranium price in kind of economic terms. The last I looked, I think it was around $21. Now, how does this price relate to all-in cost to produce?
There's an industry advisory service, UX Consulting, and they track the all-in cost for all uranium producers worldwide. And the lowest cost uranium mine in the world, called Karatau in Kazakhstan, has an all-in production cost of about $22 per pound. So what's quite shocking, but to some extent bullish about the price being in the high teens, is that there isn't a single uranium mine on Earth that can make money with today's uranium price when you consider where all-in costs are. Well, that's bullish in the sense that when, the old adage about the cure for low commodity prices is low commodity prices, that doesn't get any more true than this, especially when you have a commodity price in uranium that's not just below the marginal cost of production. It's not just below the average cost of production. It is below anyone's cost of production. And that's a very compelling picture to keep in mind.
That's pretty shocking. We're big believers in contrarian investing, and a lot of times people equate that with just looking for an asset price that's extremely high or low on a relative basis. But there's another component to it, and that is finding the catalyst that brings its price to a more reasonable valuation. And so with uranium, we're obviously at extreme lows, like you mentioned, 12-year lows, way below the cost of production for even low-cost producers. And as you mentioned, a cure for low prices is low prices, and meaning and everyone picks up on what that describes. What's describing the supply destruction in the industry when prices are too low by producers. So has this low price level since really the '07 high, has it affected supply? Or as you mentioned with the example of Kazakhstan, has supply stayed strong regardless?
It's definitely had a very meaningful impact to supply growth, and that the growth, for the most part, has come from Kazakhstan, and there really hasn't been any other significant exploration development activity. And let's complete the picture here. We kind of talked about this 12-year low price, right? And so let's kind of put a little bit more context into that. So if we go back to 12 years ago, so we're looking now at 2004, and compare the market for uranium and nuclear power in 2004 to 2016. It's quite instructive in the sense that while the price is the same as 2004, being roughly in the high teens or $18 a pound, if we look at the fundamentals, and fundamental, let's say in terms of growth, the growth in the nuclear industry comes from how many reactors are under construction worldwide, because that's the source of demand. Today, there are over 60 nuclear reactors under construction worldwide, 60. And back in 2004, the last time the uranium price was this low, there were 20 reactors under construction worldwide, a third of what it is right now. So you have fundamental growth or demand almost 3 times larger today than back 12 years ago. And then when you go back to 12 years ago, there was a very important source of secondary supply in the market. And secondary supply back then refers to an old agreement between the United States and Russia to dismantle Soviet-era warheads and to feed that uranium into the market. And that exercise provided almost the single largest source of uranium in the market at supply, over 20 million pounds a year. So if that was a mine, it would have been the world's biggest uranium mine. And that was a contract that was in place back in 2004, and it kept going until 2013 when it finally expired. That source of secondary supply, that large inventory, doesn't exist anymore. Now, there are other inventories out there, Japanese inventories, there are still Department of Energy inventories, but the exercise of dismantling Soviet-era warheads and converting the uranium for power generation, that exercise has ended. And as an arrangement, doesn't exist anymore. I think that's very bullish for the price arguments today. If you look back then, in 2004, the biggest project in the world that was under construction, Cigar Lake in Canada, that has already come into production. There isn't another Cigar Lake out there under construction today. That was such an anomalously large and high-grade project. So I'm quite excited when I think about sort of what happened in 2004 with a growth profile of only a third of what we have today, with a large mine under construction back then from a supply side, which we don't have anymore today. And you know what happened back in 2004, Chris? Look back to then what happened in '05 and '06 and '07. 2004 led the way for one of the biggest bull runs we had seen in the uranium market, where we went from $18 a pound in 2004 to $140 a pound by summer of 2007. And I believe the stage is set very similarly to see a similar kind of rally, and perhaps even sharper.
What's astonishing numbers as far as the rise in the price of uranium. And of course, uranium companies or producers that have operating financial leverage potentially have even far greater upside than the price of the metal as well. You had mentioned demand. Let's move on to the demand side. You had mentioned the number of power plants in construction right now, nuclear power plants, and over 60. And if you look at worldwide, and it's been a few months since I pulled these numbers, but there's just over 400 nuclear reactors, I believe, worldwide, over 60 in construction. Let's say 170 planned, and another just over 300 proposed. And so the demand side, as far as the growth in nuclear energy, just looks staggering. Not only what's in construction, but what's on the drawing board, or even what's in the development stages today. Can you comment what's driving that tremendous growth in demand?
It's a combination of factors, and any government, any policymaker, any utility that looks at a diversified energy mix to satisfy the electricity needs of 7 billion people in the world. You have to have energy sources and electricity generating sources that are reliable, base load, low cost, around the clock, and very importantly these days, carbon emission free and secure. You can check all those boxes when it comes to nuclear power. You can check all those boxes because when you think about nuclear power's capability, it has an enormous capability to generate clean, carbon-free electricity that's around the clock. That's what baseload means, right? The ability to generate electricity 24/7, 365. And that's something that renewables don't have. And that's something that for nuclear, when you think about any economy that is a modern economy, that has a modern healthcare system, modern transportation system, modern education system, you need baseload power, the backbone of any electricity grid. That's what nuclear is. That's why 20% of power generation in the United States is nuclear power. That's why before the Fukushima accident in Japan, over 30% of power generation in that country was nuclear power. That's why over 80% of power generation in France is nuclear. And that's why China, with only 3% of its power generation coming from nuclear, has these very ambitious goals to try to grow that. And over the next 20 years, they want to be in the same position as the United States and have at least 20% of their power, the baseload power, the backbone of the electricity grid, be nuclear. It sits on your own soil. You control that power. It's security of supply as much as it is that reliability and the fact that it really contributes to reducing our carbon footprint. That, to me, those are simply the drivers of why we're seeing more nuclear reactors under construction today than any other time in the history of nuclear power. And it's remarkable to be in any industry and talk about unprecedented growth, right? Yet have an element of that growth be, in this case, be at the uranium price, again, be lagging the fundamental picture that is so positive and so bullish.
Well, that's an amazing statistic you shared with us. 3% of China's electricity is produced from nuclear power. I mean, it just goes to show why, the way I look at it here, as far as plants that are in construction, planned or proposed, between China and India, it looks like it's at least half of all that growth. Are you at all concerned that if there's a downturn in China, if the economy takes a downturn, or in India, that this could curb their nuclear ambitions as far as electricity, or will this continue, you think, regardless?
Well, I think, as you pointed out, I mean, the World Nuclear Association lists that over 400 nuclear reactors are currently operable in over 30 different countries. The 60 that are under construction have gone through extremely rigorous studies and billions of dollars of commitments and investment before you can break ground. These are some of the best engineered industrial complexes in the world, these nuclear power plants. And so what I mean by all this, Chris, is that I believe any country, any utility that commits to building a nuclear power plant, the commitment both in terms of time, energy, and financial resources is so great that, once that commitment has been made, these projects are seen through. And once they're built, these nuclear reactors have anywhere between 40 to 50-year lives. And so they really become a stable in basically an energy portfolio. And so I think it really is a long-term business. It's a long-term source of power generation. And I don't think any of the planning that goes around it is near-term or necessarily subject to quick decisions to turn on and off.
Yeah, I imagine in addition to that, I mean, obviously, like you're saying, the Chinese leadership especially takes a long-term view, but there's probably some other non-economic factors involved. The need to reduce air pollution in China, complying with climate change protocols, etc. Let's talk about the U.S. though. What's shocking in the U.S., I don't know if everyone realizes this. I grew up in the 70s, but there was about 100 reactors, I believe, in place now. And before 3 Mile Island, there were probably another 100 that were planned and I think scuttled in the 70s and 80s thereafter. And I think now we have about 5 that are expected to come online by 2020. Do you see continued U.S. acceptance of nuclear power and growth? Is it going to make a comeback? Does it Is the Trump administration beneficial for that, or should it grow regardless?
This change in administration coming up is really going to have significant impact for nuclear power in the U.S. What I mean by that is that let's not make any bones about it. I mean, nuclear power in the U.S. Is a very important industry. As we mentioned, it's 20% of the power generation, but more importantly, it's 65% of carbon-free electricity generation in the United States comes from nuclear. Now, every utility in the U.S. has to meet the EPA regulation to curb their carbon footprint over the next 5 to 10 years, and the only way to do that is further reliance on nuclear power. Now, historically, you have sort of a theme where Democrats in the White House are okay with nuclear, but definitely not the biggest or loudest advocates, and Republicans historically have been the biggest supporters. We have an outgoing president here, and President Obama, that really almost refused to use the word nuclear in any of his State of the Union addresses. And you have a very clear position by the incoming Trump administration and President-elect Trump himself on how bullish and positive he is on nuclear power and its importance to the U.S. Grid and economy. Don't forget all the very high-paying jobs that are associated with a thriving nuclear industry and the energy independence that nuclear power, again, is associated with. So I believe that we're looking at a very fundamentally positive turning point here for nuclear power. One of the last Republicans to be Energy Secretary in the United States, Spencer Abraham, who was Energy Secretary under George W. Bush, is the chairman of my company, Uranium Energy Corp. He's our executive chairman. And some of the key people that worked under him at the Department of Energy are now part of the Trump transition team. You're talking about big advocates for nuclear power. And so I think this is an important topic to pay attention to. I think in the news right now, perhaps other kind of topics are getting more attention. Maybe some of the back and forth between the Taiwanese president calling Trump and things like that just always get the front page news. But I think behind the scenes, if you pay attention to the makeup of the team and the makeup of this administration, it bodes extremely well for very exciting 4 years of growth for nuclear industry in the U.S. There are a number of reactors under construction in the U.S., so there definitely is basically an expansion of that. But at the same time today, with 100 nuclear reactors operating in the U.S., this is the biggest nuclear market in the world. It's almost 25% of operable nuclear reactors in the world are in the U.S. So this is a very strategic market, and I think it's going to be very exciting to see what happens with the new administration. Certainly way more bullish than what we have seen in the last 8 years.
So we have a uranium price that's at, as you mentioned, 12-year lows. We have the demand that we all see that should, if anything, we should continue to strengthen. We have, at best, probably a shaky supply picture. I mean, it's all pointing to higher price, and we've seen the higher price from a historical perspective in 02 to 07. A lot of people may not realize that the uranium to a nuclear power plant, from an economic perspective, is considered price inelastic, meaning they'll pay whatever the price is. Because a lot of people instinctively think, well, if uranium goes up 12 times or what have you, wouldn't there be some pushback on demand because it's so much more expensive? Can you explain why that's not the case, why demand really is kind of invariant to the price of uranium?
Basically, I mean, this will be a short answer. I mean, bottom line is that uranium makes up a very insignificant portion of the total cost to generate electricity for nuclear power plants, period. And when you look at electricity generation costs and its sensitivity to commodity price, you see huge volatility with natural gas, for example. Natural gas prices go up, and those gas-fired power plants all of a sudden see a big increase in their ability and cost to generate electricity. If you look at a chart over 30 years of the cost input in terms of uranium costs for a nuclear reactor and the cost to generate power, is the flattest line you're going to see on a graph. And that's a very important characteristic of nuclear power. Back in 2007, when uranium was at $140 a pound, U.S. utilities were buying uranium at those prices, and no one was arguing or complaining. And that's a really interesting market to be in, right? If you see the oil price over $100 a barrel, everyone starts talking about how it could be an impediment to economic growth. And that's not a characteristic shared with uranium and nuclear power generation. So very important point that you raised, and definitely one that, again, argues well for the bull case.
This is definitely a unique time period for uranium in general. Can you tell us a little bit about Uranium Energy Corp that you're the founder and CEO of?
Yeah, sure. I mean, we're basically part of a very exclusive club of companies worldwide that have the license and other sort of infrastructure for producing and processing uranium. There's less than 10 companies in the world that basically have production capabilities. So there's definitely a scarcity of suppliers and companies with production capability, but we're one of them. We're a U.S. company. We're listed on the NYSE MKT. What's also unique about us is the way we develop uranium projects and mine them in South Texas and Paraguay. We use a method called in situ recovery. It's definitely a method that has its production cost in the lowest quartile of cost for uranium mining, and it's environmentally friendly because of the very limited environmental impact it has compared to conventional mining, being open pit and underground mining. The operations we have in South Texas really benefit from this technology. So we use the in situ recovery method down there. We own the Hobson uranium processing plant, which is fully licensed and built. And we have one mine up that was completely built called Palangana. And we have a number of other projects at various stages, from being fully permitted to being under permitting to exploration and development as part of our South Texas hub and spoke strategy. We're doing the same thing in South Texas in terms of targeting deposits that are amenable to the in situ recovery method down in South America and Paraguay. And we've acquired some conventional projects in Colorado and Arizona that really give us leverage for the higher uranium price when the price gets to levels above $60 a pound. So we're completely unhedged. And that's a unique characteristic in the uranium business, Chris, because most uranium producers have signed long-term contracts because utilities really want to sign these long-term contracts so they have predictable sources of supply. We always saw that as counterintuitive to what our investors want to see, which is full exposure to the uranium price. And so we refuse to sign long-term contracts with a fixed price and ceiling. It's hurt us a bit with the uranium price falling the way it has the last few years, but we believe it's absolutely the right thing to do, to be 100% unhedged. When the commodity price for uranium finally turns, we'll be able to capture the full upside. Again, the fact that we've really de-risked our business and are sitting on infrastructure and fully permitted facilities definitely distinguishes us. You know, Chris, it's interesting. In 2006, 2007, there were maybe almost 600 uranium companies worldwide, up from 20 in 2004. So in a very short time span, there was all of a sudden such a hot market for uranium developed, arguably somewhat frothy. And we've gone from 600 companies worldwide back to probably, again, under 20 again. And so the ability to be able to say that you're in the business today with infrastructure and a team that has basically seen and done it all. I mean, we have an executive chairman in Spencer Abraham, the former United States Secretary of Energy, who ran the Department of Energy, who currently sits on the board of directors of Occidental Petroleum, a major oil and gas company. Our executive vice president, Scott Melby, was formerly the president of Cameco Inc. Cameco is the world's largest uranium mining company. And so, you know, you look at our executive suite, you look at the asset base, and you have the making and you have the people that have the experience of having been either at the world's largest uranium mining company or the Department of Energy, and bringing all that experience into a very entrepreneurial company. Our business is only 11 years old, and so we're still young and have quite a bit of entrepreneurial spirit and energy in the company. And insiders, including myself, are very active owners. And, you know, we're large shareholders of the company. We regularly buy stock and add to our position. So we really believe these levels are quite depressed and an attractive entry point, and we're putting our money where our mouth is.
Well, Amir, thank you for an excellent overview of the supply and demand dynamics for uranium and the opportunity that exists today. I appreciate it. Thank you for coming in.
It was great to be with you, Chris. Thanks for having me.